Alright guys, how are you? Just give me 1 second here and everything will be right back. There we are. So, what's going on in the markets? Well, there's a lot of hoopla that's gone out of the market, right? We're not going to get the stimulus finally. Vaccines are starting to fail left, right, and center. And we're getting into the fatigue stage, as I've mentioned several times here. So, when you look at the overall analysis of the entire market today, the bias is still to the downside. Okay, the only thing that's kind of holding it up is the Nasdaq. Um, I'll just quickly go through this very quickly. Equal weighted S&P at the bottom. You take a look at the dividend at the bottom, breaking. VIX rising in a nice steady F flag. This is good for the bears, right? This is good. Why? Because it's absorbing and consolidating uh, the the move. S&P 500 continues to start looking like a limp tick, to be honest with you, where you start getting that acceleration to the downside, right? You kind of see that, okay? Uh, so we can expect volatility. We can expect the market to go lower. Um, Remember when we were getting all these, oh, vaccine, oh, more stimulus coming, oh, vaccine, more stimulus coming. Remember all that, right? Market kept going up. And now you're getting the bad news, but the market is not going down rapidly and then, keep going down. Why is that? Well, because stimulus and um, vaccines were not the reason why the market was going up. The market was going up because of free money, QE. Okay, that injection. So, and plus you had some people that believed that this would just kind of magically go away. Okay, so you had a combination of those things that were really pushing the market up. It had nothing to do with it. If it was vaccines and so forth, when you start seeing them fail left, right, and center, you would see the market just crash. It's not doing that. Okay, so it's not about the vaccines. New York Stock Exchange continues to push lower, flagging out right in here. Okay, very small, but you get the point. All right, so we're expecting lower here. Dow Jones looking really ugly. Same thing. S&P 500, we talked about the limp tick, right? It's still within a structure. The structure has expanded. So, you know, not looking good. Now the Nasdaq has made its way all the way to the top, okay, but it doesn't look like it's going to break out. All right, you cannot break out when everything else is falling. Small caps continuing to push back down. Google, the Fangs. What they're doing is they're starting to, push to the upside within this flag here, right? And this one doesn't have to be technically correct. Okay, it's just what it's doing. It's correcting through time. Waiting for the earnings on Thursday, big tech and so forth. Remember, earnings are about uh, under promising and over delivering, right? So when they miss hard, right? Uh, it's not something that the market expects. Even if they meet or slightly beat or something like that, a lot of times you see it go up and then it'll fail. It all depends on what the market is doing. Transportation continuing to push lower. Okay, obviously no stimulus for the airlines, and that's bad. World stock market index continues to push lower. Okay, airlines failed miserably at the resistance area here. China at the bottom, still breaking below the flag. Emerging markets doing nothing, but it's at the bottom of the trend line after breaking, so it doesn't look very bullish. Emerging markets the same. Japan finally made a decision, right? Uh, Rising wedge, breaking down, second day now. Australia pushing lower. Nifty 50 kind of holding in this flag in here. fix this. Okay. Still in a rising wedgie looking pattern on the bigger time frame. So eventually this will catch up with the other ones if the markets start to fail. Cosby going sideways. Their GDP numbers were 2.5, negative 2.5. Very good considering the rest of the world. Europe is looking really bad. Okay, obviously shutdowns and lockdowns and whatever. Okay, so but again, it's reflecting more the reality of the situation. Okay, and not the hopium. Germany down 1.5 for today. Um, Not looking good at all. Okay, UK near the bottom. Taiwan holding. Brazil finally broke. Okay, convincingly, it's closing below the trend line. So look for Brazil to continue to go lower, and that's not good for commodities. Okay, uh, we'll skip this. Oil back below 40. We've talked about oil. It's based on demand, and this is I don't want to say manipulated, but oil companies themselves are hedging, right? So they're going to keep that price as stable as they possibly can. Bitcoin did a really nice job today breaking out. Okay, incredibly bullish, which is good. Let's see if it can continue to perform in this manner. So what we want is price to stay above this trend line. Okay, for now. Ethereum, let me go out. Uh, Ethereum, Litecoin, these things, it's like silver. I mean, they'll kind of follow Bitcoin, but Bitcoin is where you want to be trading. Gold pushing up a little bit today, but again, I don't like this structure. It's a structure below a structure. It's not doing a very good job. All right. We want to see fear come into the market, and hopefully that will push it higher. All right. We'll skip this. The commodities overall, I'm just going to touch on just this one. Okay. It's looking a little bit weak now. Right. Correcting through time, yes. Structure above a structure, whatever. But I'm fearful that if the market starts to go, everything else will be sold as well. The dollar, okay, breaking down from this little structure, this little wedgie thing. I'm looking for lower prices in the dollar. U.S. dollar Japan breaking down. Okay, when the dollar is underperforming Japan now, um, that's not good for the markets. Okay, that means there's fear and people buying the yen instead of the dollar, and rightfully so. Okay, at this point. Before I was pro that the U.S. would do better, that the dollar would do better, that the economy would do better. I didn't think that Trump was crazy enough to just allow herd immunity. But as that started to become the theme, more and more that became the theme, the dollar started to suffer. And now we're getting into the reality of fatigue, that the virus is not going away, and so forth. And again, yen is the safe haven. Euro US dollar, structure above a structure. I expect this one to push higher. The pound, okay. Let's zoom in a little bit. Okay, broke out from this downtrend. Okay, so structure above a structure. Look for higher prices in the pound against the dollar. Turkish lira is really going vertical. Okay, it's jiving with the macro, but when it starts going vertical like this, usually kind of tops out. All right, and then it absorbs it. It starts to correct. Right, so you start seeing this vertical move. Right, see it. Uh, so caution on that. U.S. dollar ruble pop today. All right, so pushing back up. Not too concerned. I still think um, that this will probably roll over. But then again, you have oil, that's stabilized. So do you want to own rubles or do you want to own dollars? It depends how you want to look at it. US dollar CAD, all right, still just not doing a whole hell of a lot. Australian dollar uh, pushing to the upside. Okay, this should break out at some point. New Zealand dollar pushing higher. Uh, Dollar is still very weak against the won. All right, and the 10-year is, this, we talked about this last week, right? That you're going to get a tight, 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 and then boom, down. Well, there it is. It's one of our structures, okay, from bare knuckle charting. So be aware of that. All right. So that's it. So let's go down to the smaller time frames now. And the Nasdaq did some trading today in the morning. So let's remove everything. All right, we talked about yesterday about the head and shoulders. Right. Let's clean this up. Here's the minute chart. We had identified yesterday the inverse head and shoulders, which was this. Okay, here's the neckline, broke out, and then continued on higher. So that was a good call. That's exactly what happened. All right, and then we went into this weird kind of, this is more noise than anything else. The bias was up to the upside because of the head and shoulders, but I don't think this is going to last. Okay, we're still below the trend line, the longer term trend line, and this is almost not. You can't even measure this. You can't even count waves. And when it starts doing something crazy like this, it's doing something you just can't see at the moment. Okay, it's in the process of doing something. Um, James, one of our subscribers, he pointed out just now, a little right before I came on, that this is a double top. It's confirmed. Okay, and he's very right. And the bias now is that we will sell off. Okay, just waiting for the break. Time now is 2:37, and again, the entire structure just looks very funky. It's doing something that I don't understand. Right? You can't measure this. It's just whatever. All right. Uh, Also note that we are in that area. Let me remove some of these lines. Okay, we are in that area where previously it was the resistance area. So makes sense that it will have some difficulties in here. Okay, my best estimate. How are you, James? My best estimate. What is likely going to happen is that we are going to get a correction from this structure, but much lower. Okay, it's always going to correct. Okay, it's just going to do it in uh, in a manner that's just it's going to put a lot of pressure for a correction to the top. That's the point. All right. So that's what I think is going to happen. Oops. All right. It's just going to stay in here, and just every rally should be sold within this channel. If we take a look at the volume, and we'll do it from this morning. Where is it? We're right at the point of control right now. All right. Definitely we have the double top, as James pointed out, which is really good. Good charting on his part. And that's the good thing about, you know, when you have a group of guys that understand what everybody else is doing. That you can post some really nice uh, charts. It doesn't necessarily have to come from me. They know how we do things. And that's very beneficial for the new guys. But if the new guys are going to come in here and start talking about the way they do things and so forth, well, that ends up being a problem because you can't mix match what I do. If you do that, it's just gibberish. All right. Okay, so let's continue. We're right at the point of control. Everybody's happy here for the day. If we go back a little bit from yesterday, just to get the 2-day flavor, all right, we're still at the point of control. So, it explored the entire range of the 70% of the bell curve. Okay, hit the top and then just failed. So, um, again, we're looking for that down move now, right? We're looking for this to fail and at least come to the bottom of this trend line, if not much lower. Well, if tech doesn't have a downward trend, then the market's not going down. Well, like if it doesn't do what it's supposed to do, right? And that's correct. Um, you're going to end up with a sideways market. So, these guys are the market leaders. And again, I'm going to say it that a lot of people, they look at the index of the Nasdaq, even the S&P, and say, "Oh, look, the market is up, buy the dip and all that stuff." The reality of the situation is that most portfolios, hedge funds, 401ks, they do not resemble the Nasdaq or the S&P, not even close. So it's very, very misleading if you don't understand what's driving those indexes up, which is 6, 7 stocks. So unless you own a large chunk of your portfolio in those 6, 7 stocks, forget about the indexes that we're looking at. I hope that makes sense. All right, let's take a look at Germany. Let's get rid of this stuff. Continues to dwindle away. Get rid of some of this stuff. It's now outside of the volume weighted average as per the US trading time. Okay. And it's closing at the bottom of the European trading. Okay, closed near the bottom. That's not bullish. That's actually very bearish. Okay. So that's why I think, again, the overall markets, what they're telling us is bearish. Okay. It doesn't have to be spectacularly bearish, but it is bearish. Now, clearly, okay, if you were to measure this, and remember, you're always measuring from the first counter trend move, right? So you had this structure. Let me put it up here. You had this structure right here. Okay, which was corrected from the down move. And then you got the opposite, right? Which is exactly what it should do. 1, 2, 3 down. It's wedging, right? At some point, this will correct. All right. Now, in a bear market, unlike a bull market, what you should start to see is that these structures start feeling incredibly bearish. Okay. And then they will correct and then form again and then go incredibly bearish again and so forth. So that's what we're looking for there. But again, understand how to count the waves properly. It's the first counter trend move. All right. 3 waves, 4 points. Chart them out, see where the best risk reward is, and go from there. Let's go back to the S&P 500. For the trading day, the last 2 days, where we are below the point of control. The um, inverse head and shoulders was satisfied. We hit 34.18, all right, and then started to fail. And now we're going sideways below the point of control, indicating weakness. This is a flat, and we're expecting for this to break. Now remember from yesterday that this is a 63-day moving average. It's right at it. It's like a magnet. It's drawing it, right? And you are stuck somewhere between the point of control of the last 2 days and that 63-day moving average. And we can put it up there again just to show it. There it is. See it? We can actually move it a little bit because it advanced today. There we go. There we go. All right, let's come back. All right. So there it goes. Breaks down. Right? It took. I just got done talking about it, and there it goes below the 63-day, below the POC. It's let's see what the Nasdaq is doing. I suspect it, right, coming back down. So this is a good little trade right here. Clearly, right, double top. Nice call for James. And that's what makes me happy personally. When I start seeing guys that understand what I'm doing and they start doing it on their own, to me that's the biggest success. That's the biggest success. Because you're spending, what, 60 cents a day? And you're learning how to do it properly, not guessing, not telling me stories, not, tell me about the Hukamukachukamukachukamukachuka and the RSI and the MACDs and all that nonsense. Right? It's just a pure way to read a chart. How you doing, Alessandro? Welcome. Anybody have any questions so far? All right, good. Let's see what the VIX is doing. All right, starting. This is the consolidation that we talked about, right? So what are we looking at here? 1, 2, 3, fully formed, rising F flag, breaking this downward trend clearly, right? We're above it. So let's see, the compass is right here. This is the compass. Consolidating this move from the bottom. And when I'm saying this move, I'm not talking about this, I'm talking about all the way back here. Okay, so this is the flagpole, this is the rising flag, and we're expecting this to continue to move to the upside. All right. Again, you see the patterns that we talk about. They're all valid, right? What happened? Thrust up, consolidation, wave 3, consolidation, pops up, breaks the previous high, comes back, and creates a new structure, which is a rising F flag, which is bullish. Okay, it's a high base, and that's what you want to see. Uh, they're hedging their bets. Remember, these guys were buy the dippers. So they went from buy the dippers to, double dippers. Double dipper session. And market crashes and so forth. Some of them do it for political reasons, saying, look, you're not voting for Trump. The market's going to crash, fear mongering. Others are doing it to hedge themselves, right? They don't want to seem like perma bears. Believe me, if the market starts going back up, they're going to be the first ones to be like, yeah, we just went through a little period of slowdown and now we're right back on track. There's a recovery going on in the markets and da 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 da. Yeah, watch. As soon as the stimulus comes out and the market moves up a little bit, all those guys, track them. They're going to tell you that bullshit. All right. For me, it's one big entire trade. The whole thing. From March till now and months to come, it's one big trade. Yes, you saw price move up rapidly. Yes, you saw some of the indexes go to new all-time highs because of a few stocks, but the economy is nothing uh, like what the stock market is, right? And for me, being away from the U.S. for almost 10 years now, I mean, sure, I came back and visited a little bit, a couple weeks here and there, but generally speaking, this is not the United States that I left. It's really bad, in my view. I think the people that live here, they don't realize it. But from my perspective, being away, coming back, comparing the two, it's really bad. That's just me, though. So, all right, let's go back to. Did we do New York Stock Exchange? That's breaking down. All right, that's breaking down. All right, S&P back into the structure. All right, let's see how well it does. Nasdaq back into structure. Now remember, a crossing of the line doesn't necessarily mean that, oh, the world's coming to an end, and you have to wait to see how it behaves. Sometimes obviously it's just going to collapse. But those they're rare, or they're trying to uh, invoke emotions. So you gotta be patient. Sometimes you'll miss the trade. That's fine. That's the cost of doing business. Any other questions? Right. Well, it's 2:53. Let's wait till 3 o'clock. See what's going to happen. All right. Again, the bias is to the downside. All right. Let's look at the market internals coming up into 3 o'clock. Let's see what's going on there. What's leading the markets? All right. So for today, let me refresh the page. All right. So for today, technology is leading, and we understand why. Consumer discretionary was Amazon, right? So that's that's driving that. Uh, Communications is not what you want to be, and utilities, you don't want them to be up there. What's lagging? Industrials, financials, and energy. Financials, um, you know, I saw a video of some guy, and he's talking about how the banks want to crash the market and how the financials are in trouble or they have tight lending standards. Have you ever seen a bank in a recession with high unemployment be pro lending? That's just absurd, right? That's just crazy. But it sells. I guess that stuff sells for him. People like it. He's got a lot of followers, whatever. But I'm not about the stories. I'm about reality. Okay. Of course, banks are not going to lend when you don't have a job. Of course, banks are not going to lend when the economy is, in shambles. But I am not in the camp that believes the banks are going to blow up like 2008. Okay. I think that the banks, with interest rates going lower, going into negative territory, they're going to suffer. That's my belief. All right. But we're not at negative interest rates. Sure, they're not going to be very bullish. Forget about that. But you can go back into, and maybe we'll do that in a minute here. But let me finish this real quick. All right. So for the 5 days, we have utilities leading, horseshit, communication, more horseshit, and healthcare. Lagging, industrial energy, and technology. Okay. So it's horseshit. All right. So let me show you the banks in 2000. Oh, fuck it. Just type it. I'm lazy. XLF. All right. So here's XLF. And take a look what banking did in 2000. Nothing. It just kind of went sideways. Okay? We can see a head and shoulders as if it was going to do something, but it did nothing. Right? Now let's compare that to the S&P 500. Okay? S&P took a huge dump, but the banks just kind of went sideways. It was not like it was in 2008. So we are comparing 2000.com to financial crisis. It's very, very, very different. Okay, it's not the same thing. So, am I bullish on banks? No, of course not. But I don't think it's going to be 2008. All right. All right. Let me get rid of this. What will cause the market to fall off a cliff? Well, it shouldn't have been up here to begin with, right? You don't go into recessions, and especially this kind of a recession, which is really a depression. I mean, we started this back, what, in March? It's October, and, you know, where's all the economic recovery? Hey, we're going back to normal. They're still talking about 10% stimulus. I mean, I think the fact that it's so frothy is what's going to make it go down. But if you measure it from 2000, I'm sorry, 2000. Ugh. If you measure it from March, April, you know, it won't be really a crash, would it? It would just be where it was in March and April. It's just this move is bullshit. So I wouldn't view it as a crash because the markets should be down here. Maybe they won't even make it that low. Maybe what we'll get, and this would make a lot of sense, by the way. Maybe what we'll get is this. Something like this and then up. Okay. Is that a crash? I don't think so, but you know. Remember, they're gonna do everything and anything they can to keep the stock market up. That's rule number one, right? So the cause is exactly what you've seen. It's just fatigue. It's just more of the same. Markets are down. Why? What happened to the stimulus? Well, it ran out. 6 months into it, it ran out. QE, what happened? Right? They did it early on, and what happened? It ran out. Now what? And that's why I kept talking about the savings bubble, savings bubble, savings bubble, savings bubble. Yeah, if money's going to flow, right, from deficits, okay, into the productive economy, household income to savings becomes profit savings, and then it ends up where? Not underneath the mattress, but in the stock market. Okay, that's the way it works. If you understand that, you don't need to understand anything else for the long term. Okay, you don't need to understand anything else. Deficits equals buying until the snap moment comes, and then forget it. And then that's not the case anymore. All right, so it's stuck at the point of control. It's 3 o'clock, 3:01, and just stuck. Any other questions? Jason, it's an expansion of the structure, bro. Your chart is off. James, don't look at the red line. All right. All right. So yesterday, I don't think I made this public. It should be public now. But yesterday in after hours, I posted on Patreon that there's an expansion of the flag that has taken place. The moves that occurred yesterday were sufficient to create that expansion. So what is the expansion of the structure? Okay, so here you can see it, okay, that it price pushed through. Okay, it appeared very thrusty, very, strong, that it was going to take off and go towards the top. Okay, it's going to do this. And then what happened? It suddenly failed, right? And it failed miserably. We got a thrust down move. We identified the previous area of potential reversal, okay, which was right at the bottom here. And then it snapped back up. So this is not a breakout. Remember, when you're doing bare knuckle charting, price cannot violate the trend lines, okay? You can't do it. So this is an expansion of the structure, of the channel. The longer price stays within a channel, you're going to get these expansionary moves where it will go a little bit above and then fail. A little bit below and then fail. Okay? So remember, the longer it gets there, the wider the channel will become, the more of these failed breaks you'll have. Okay? And when they come back into structure, if you're bullish, you got to get out. And that's why we have that rule. Okay? Because it's going to snap back in the opposite direction. And this is a perfect textbook example of what I'm talking about. Right? You had a breakout, failed, back into structure, and then just collapsed very, very quickly. So from failed moves comes fast moves in the opposite direction. Hi, Duncan. Why do you think the market stabilization, fuel, and plunge protection team? Yeah, you know, you remember the plunge protection team, huh? Oh, my friend. Yeah, it's not plunge protection team. It's incubator economists, right? It's not something that's going on in the background. You know, six men in a dark room with one light, and they're smoking cigarettes, and the tie is undone, and pushing buttons, and dump it or buy it or whatever. uh, it's just the way it is. Incubator, what I call them, incubator economists believe that printing is stimulative, that it can grow an economy. I don't believe that. I've seen no evidence of that. Okay, it's just not possible. The market will recover when the market is ready to recover. The economy will recover when it's ready to recover. Does it help? 100% it helps. 100%. Okay. Here's the analogy I use. Well, I used to use, but let's say that we're back in near the Stone Age. 100 people are working, right? And um, not Stone Age, but whatever. 100 people are working the fields. Everybody, there's a boss, there's everybody else working, and they're feeding themselves. So one guy comes along, the boss comes along and says, hey, I invented the tractor. I don't need you fuckers anymore. I just need a driver, a mechanic, me. I'm done. You're all fired. All right, so 97 of them are fired. Now what? That's it? Game over? No more economy? Who is he going to sell all that wheat to? Right? He's very efficient, but who's he going to sell it to? The customers are the people that were working, right? So you need to give them food, shelter, education, so they can go off and do something else. So in that sense is what I'm saying, that sure, printing money and allowing the people to kind of uh, sustain themselves for a period of time, that part, yes, that's not stimulative. That's sustainable, right? To sustain them. Eventually, when things calm down and whatever is the problem fixes itself, the economy will start to improve on its own. It did every other time in the gold standard, right? Suddenly, what? Can't do it? And I think a lot of people are tainted by the bank runs that happened in 1929. So they use that as the excuse card that, oh, had they just, printed money and gave people the money, then there wouldn't be a bank run, and then nothing, it wouldn't have turned into a depression. Yeah, well, true, but you can't 100 years later or whatever, 90 years later, keep saying the same thing as an excuse for you to keep printing money, because it doesn't do anything. But they've put the cart ahead of the horse. They believe that if they print money, then that's stimulative, and the reason the economy recovers is because of the printing of the money. But Where's the evidence for that? Right? Where's the evidence for that? Look, every time they have printed, what happened to GDP growth relative to debt? It went down, right? Down again this time. So remember, if you're going to stimulate, right, you're going to get at least $1 of gross domestic product for every dollar that you create. That's at the very least stable. It would go sideways. It would go sideways, not down. You're not going to get less GDP growth if you're stimulating, right? So where's the evidence? There's no evidence to support that it's stimulative, that it's, that it does a whole hell of a lot. It doesn't even stabilize the economy. I mean, relative to debt. So again, for me, I call it real because if I see it and I said, oh, okay, yeah, that makes sense. That's the way it is. Then I'll accept it. If I don't see it, I don't accept it. What do you want me to do? Tell you yes, even though it doesn't look like that? Because everybody else agrees? And that's the problem I have with incubator economists. And somebody's like, oh, you're not an economist. Why did you put economist on your Twitter? We make fun of them. It's like, dude, I am, to me, an economist is somebody that can tell me what the future is, right? It doesn't have to be perfect, but you have to tell me that, this is fucked up and this is not going to work right and this is why. Um, if you can't do that, then call yourself whatever you want. You can be an economist and get everything wrong. And you have a piece of paper. Does that make you an economist? No, not in my book. Not in my book. I hope I answered your question. And it's the same thing with charting. I looked at so many people in the way they were presenting the charts. Okay, uh, 10 million indicators in the chart, and this and that with that, and I have this bot, and it gives me this signal, and I tried it all. And literally, I don't know how many times I blew myself out trying to mimic or copy or follow their theory. So eventually you say, okay, well, Occam's razor, right? Just sit back, take everything out, start fresh, see what you can identify, see what works, and see what doesn't. If it works, use it. It doesn't, fuck it. It's out the window. And that's how bare knuckle charting came to be. And then I applied that to macroeconomics, right? If I can see it, point it, and confirm it, I believe it. If I can't, garbage. And that's how I ended up debunking MMT. Now think about it. If I were, again, for the new guys, if you just look at the chart in this manner, what do you see? Bunch of lines going up and down and sideways and, right? It's just everywhere. It makes no sense. But once you start to applying the rules of bare knuckle charting, which is not Elliott wave, by the way. They have A, B, C, D, elemental P, and 5 waves and 3 waves, and after this, that's an A, and then this is a B, and I don't understand it. I tried to read a book once, and I was like, yeah, right, and I threw it out. I mean, if you don't get the first count right, then everything else is garbage, but you don't find that out till later. It's like, what the fuck? So that didn't work out very good for me. So then I'm like, okay, what does work for me? Right? I know markets move in waves, that I know. And then you end up with this. And be honest with you, I didn't come up with particle market until recently. Not that I didn't know it existed. Well, I knew it existed because in a small 1 minute, 5 second chart, some tweet comes in, market goes straight up like it did here. Good luck with that, right? Yeah. Tell me about waves then. They don't work suddenly, do they? But that was something that was on a minute chart, and I was not trading minute. Uh, I mean, I would do it occasionally just to keep myself practicing, okay? To do it on the fly, it happens very quickly. Dynamically, it's really good practice, but I wasn't necessarily trading. So I knew about it. But then I've never really seen it in bigger time frames, which is what I was trading. And it wasn't until recently with this move, okay, and there was several moves like this, right? See here, okay. Several of these moves that would just go straight down, and then I'm like, there's no waves, there's no this, there's no that. There's a difference here. There's a difference between particle market and a wave market, and we have to be able to distinguish which is which, right? So you go out to a daily, you see a move like this, kind of makes sense because you understand that there's a pandemic and everything is shutting down. But then you get a move like this straight up. That's not a wave. That's a straight up moonshot, right? And this is in here is where I figured out that wait, this is something that I've seen on a smaller time frame, not in a bigger time frame, uh, and this is fucked up. Okay, so don't even. I mean, you can try to trade within it, sure, in here a little bit, but this is not a wave market. This is a particle market. It just moves in one direction, like a light beam, right? So to use the analogy of the quantum physics wave particle, sometimes a wave, sometimes a particle. So that's why I call it a particle market. All right. I hope that helps you guys out a little bit how to think about it. And if you look at the here is when I said MMT everything, right? That was back in April 20th because all they kept doing was just coming out with more lending facilities, more stimulus, more this, more that. Well, fuck it, just MMT everything. Just buy everything there is under the sun, and that's it. Get it over with. And what happened? All right, this is what it looked like at the time. And I made the mistake of thinking that this is going to be a 1-2-3 down, right? That this is going to be a 1-2-3 down. And then it would end, you would have the structure, and then you would start getting the correction. Okay. That didn't happen. That's why I was like, this thing is going fucking straight up. You know, it's a particle market. I mean, look at the gap ups, and I think I have that in the Qs or NDX. Look at that. Maybe this is better. You can see it better. Look at that. Gap, 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 gap. Everything was a fucking gap. You know, it just kept going up every single day. And it's like, okay, wait, the economy is in shambles, and this thing is moving in a particle market, gapping up every single day, every other day or whatever. Well, that doesn't make sense. And look at it. It just kept on gapping and going, capping and going. And now we end up with this very familiar pattern of an M pattern, right? So this is how you end up with that the market is going to go lower, right? From a charting standpoint. From an economic standpoint, you're seeing these people. They're like, yeah, we're going back to normal. Look, this chart recovered. That chart recovered. This recovered. Oh, look at that. Yeah, this is great. Whoa, 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 whoa. Slow down. Come back to reality. You are measuring whatever you're measuring from a lockdown. So you're measuring from here. That look, oh, it's going back. Okay, but that's not a recovery. A recovery is anything above whatever it was. Okay, forget about the stock market. I'm just telling you about economics here, about the indicators. Are we at January 2020 levels and improving? No, not even close, right? Not even close. So what recovery are you expecting? It took us 10 years to come out of the financial crisis, and that was an interbanking problem. Sure, there was some housing, but that corrected itself long ago. So what happened? Why do we have to MMT everything? Right? Everything was QE this and QE that, and twists, operation twists, and QTs and QMs and elemental Ps the whole way up. Uh, you know, and you think now that it was a hurricane just went by, it did its destruction. Now we're just going to rebuild and go back to normal. How the fuck? How is that going to happen? You know. So this is the problem with incubator economists. Right? They're perma bulls. There's a time to be a perma bull. Perma bull. It's time to be a bull. Time to be cautious, and a time to be bearish. Could this just be a pause here on our way to the next move up? Sure. I don't have a problem with that. If that's what the chart says, that's what the chart says. That this will end up being something. I'm not used to this thing yet. That this ends up being something like a flag and then continues higher. Look at that. I got Parkinson's. Right? How do I get rid of this? Right? That this turns out to be something like this, and off it goes into outer space. Ah, sure. Why not? If that's what happens, that's what happens. Right? How are we going to know that? Well, simple. If it crosses this line, okay, then the bias is to the upside. First, you're going to get a test of the previous high, all right? And then you're going to be in this danger area. Right in here is going to be a danger area because you don't know if it's going to come just above and then roll over. It's going to happen just below, okay, right at it. Right? You don't know these things in advance. It's not our job to know. But if we end up in some kind of a scenario like that, okay, breaks out, starts doing some funky shit, high basing, well, you know what the next move is, right? This. And that's what it's going to be. Again, let the data tell you what's going on. All right? Don't guess. And that's the beautiful thing about bare knuckle charting. You can interpret it wrong, that's fine, and that's why, we have the other rule. It's okay to be wrong. It's a cost of doing business. It's okay to be wrong. It's not okay to stay wrong. Right? If you're wrong, fuck it. I'm wrong. I'm out. See you. Bye. Don't tell me about fucking mental game and stupid shit like that. That's not mental game. That's stupidity. All right. All these, believe me, all these sayings, all these rules, they're written with blood, man. They are written with blood. And like I tell my kids, either you listen to what I'm telling you, or life will teach it to you. It's up to you. How do you want to learn it? All right. So we are 324. It's not falling, as it should. right? Just keeps on consolidating, keeps on uh, building this point of control. We'll see. Let's take a look at the VIX. All right, just hanging out there. S&P, all right, back into structure. Um, New York Stock Exchange breaking down. Dow Jones, kind of the same thing here. I gotta move this S&P. Transportation's really selling off, huh? This is not good. Again, you can see it, right? 1, 2, 3. Not rocket science. Again, if I can point to you, show it to you, doesn't matter what the chart is, time frame, whatever, I don't care what it is. If I can point, you can see it, you can verify it for yourself, then you believe it. If I can't, it's garbage. Garbage, garbage, garbage. It's not just me, anybody. If they can't point it to you and you can't replicate it, throw it out. All right, so transportation now are down 2% for the day. That's interesting. And the market is, pretty much what? S&P down 0.22, NASDAQ up 0.7, small caps down 0.7, and the FAGs are up 1.35. Transportation down 2%. So you got two opposing forces, right? You got the market leaders that are saying, oh, okay, we're waiting, we're buying because we're placing our bets. And then you got the transportation saying, fuck, there's no stimulus. I'm going this way. And the market is stuck somewhere in between. It's stuck somewhere in between. Let's take a look and see what um, airlines are doing relative to hotels. All right, so the airlines are still outperforming on a small time frame, of course, still outperforming hotels. So that's interesting. That's interesting. Let's take a look at the S&P priced in gold. Where is that? I have it somewhere here. All right, it's coming back down to the support area. Okay. Again, notice that S&P started to underperform gold back in October of 2018, 2 years ago. That's interesting. That the market preferred gold over the S&P 500. Yeah. Again, I've said this before. In my opinion, things started to go south back in 2018. Okay, and there's a lot of data points that, hindsight, you can kind of see them. At the time, you couldn't, of course, but
Mic off. Mic on.
I don't know if you guys remember. I had a chart. Maybe I can bring it up. Let me see. I had a chart, and I was kind of bitching about it for a long time. Where is that thing? Let's see if I can find it. Is this the MMT everything? Yeah, see it? I'm like, yep, MMT everything right there. What happened? Boom, straight up, particle market. Yep. The idea was hidden from violating one of the house rules. What house? Ah, the Patreon. So stupid. Anyway, but at least they allow me to show it to you. Okay. MMT everything, boom, straight up. All right. This was another one. What the fuck? What did they do? Take out away all my charts, man? That sucks. Anyway, um, this was another one here, right? Inverted yield curve. I said, look what's going to happen, right? No, that sucks, man. They took out all my funky charts. Prior to this is February 26th, by the way. Um, I kept saying that, I was ready to quit trading. I was done. I'm like, if this fucking thing does not fall apart, I quit because I don't know what the fuck I'm talking about, right? And I kept showing the volume by price that it was empty. There's nothing up here, and yet the market kept going into this euphoric breakout in a tight, tight, tight formation, right? You can see it, right? Tight, 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 and then boom. And this really just, I don't know, it. I wanted to pull my hair out, to be honest with you. Oops. Okay. And clearly, you all know what happened after that, right? At least it didn't violate this one. All right. Boom. There it goes. There it goes. Everything went to shit. And then, here we go. MMT everything, my friend. Yes, no problem. Everything is fine. We have a printing press. All right. So this is what I'm talking about, the danger area. This is the part where it gets funky. See here? This should have double topped, right? But it didn't. So you're like, okay, it doesn't always do that. It goes a little bit above and then starts coming back down, right? And then it starts to fall apart. Well, that didn't happen, right? And that's why it's such a danger area right in there. Okay, so what did happen? Broke out, came back in, and boom, took off. What do you do with that, right? You got to be bullish. Once it starts clearing this area again, right? It comes back up. Then you got to be bullish until we got this structure in the making. Okay, this failed. This did what should have happened here is happening here, right? So again, this is a euphoric move. It's a very extended, very thrusty particle kind of market. Look at that, straight up. Okay. This is the chart I wanted to show you. I can't believe it took this down to. That's horrible. Anyway, um, look at that, right? I kept bitching about how the 10-year. Where is it? I kept bitching that everything was bunched up in here. And every time it bunched up, what happens? Bad things happen, right? Recessions. Bunched up, recession. And I'm like, okay, it's bunched up here, thanks to QE, but this time everything is falling. Everything is falling at the same time. See here, you had the long end, which is the green, and here, okay, it kind of stayed elevated while the short-term rates dropped. Here, the long rates are dropping just as much as the short. And what was going on in 2009 19? What was happening in here? We had repos. It's not QE. It's short term. Yeah, but why is the long end come down? Right? That it doesn't look right. Very similar to this, right? Very similar to this. But again, the long end stayed up, not down. Oh, you're overthinking it. It's the longest job expansion in